Hi, welcome. So what we're going to do right now is I want to go over some adjusting journal entries. Adjusting journal entries are always done at the end of the period. So whereas the general journal entries are done during the period, for example, during the month, then at the end of the period, that's when we're going to do our adjusting journal entries. So it's very important to realize that adjusting journal entries always affect one income statement account. It's either going to be an income account or an expense account, and one balance sheet account. So there's always one income statement account adjusted and one balance sheet account. Typically, it's either going to be the asset accounts or it's going to be a liability account on the balance sheet. So it always affects both the income statement and the balance sheet. Going back to the general journal entries, when we went out and we purchased supplies, so let's say on September 12th, 2016, we went out and we purchased supplies. And let's just say, for sake of argument, we went out and we purchased $1,000 of supplies, say, at Costco, and we used our business checking account. The journal entry at that time would be a debit to supplies for $1,000. And because we used our checking account, we would have credited cash for the $1,000. So it's a debit to an asset account, credit to cash, which is also an asset account. So you reduce the cash account, reducing one asset, increasing another. That's done at the time that you went out and purchased the supplies. So that's a general journal entry. At the end of the period, what we would do is we would go and we would count the supplies. So we'd go to our supply cabinet and we'd actually count the supplies. And if I said there was 400 supplies or $400 worth of supplies in the supply cabinet, then from a T account point of view, the supplies account, because of the September 12th entry, had a $1,000 debit balance in it. That's this. And then if I said we had $400 at the end of the period, then the question that is always asked is, well, how do I get an account from a $1,000 debit down to a $400 debit? And the answer is that you have to credit it $600. So the adjusting journal entry that would be done at the end of the period, and say the end of the month, would be a credit to the supplies account for $600 and a debit to supplies expense. So that's one example of an adjusting journal entry. Another adjusting journal entry often is prepaid insurance. So insurance, as you know, is always paid ahead of time. You can't go back and pay your insurance bill retroactively. So at the time that you prepay your insurance, so let's say we pay 6 months of insurance out ahead of time, and let's say insurance was $100 a month, we would credit cash for the 6-month premium, and we would debit an asset account called prepaid insurance. And this would be done at the date that we made our initial 6-month insurance premium. At the end of the month, what we would do is we would reduce the prepaid insurance account, which has a debit balance of $600 into it, which represents 6 months. At the end of the month, we only have 5 months worth of insurance remaining in that account. But before adjustment, the prepaid insurance account, would have $600 in it, and representing 6 months. And of course, at the end of the month, you should only have $500 in it, representing 5 months of insurance. So in that particular case, we would debit insurance expense for $100, and we would credit the prepaid insurance account for $100. So that's the credit to prepaid insurance. If you didn't do this journal entry, your expenses would be understated by $100. Your assets, in this particular case, prepaid insurance is the asset. If you did not do this journal entry, assets would be overstated by $100. So here's your income statement account, the insurance expense, and of course prepaid insurance is an asset, belongs on the balance sheet. Finally, very common adjusting journal entry is to depreciation. And depreciation is a little bit different in the sense that when we go out, and let's say we bought a vehicle for $40,000 and we paid cash for it, we would credit vehicles for $40,000. And if we paid cash, we would credit cash for $40,000. And this would have been done whenever we bought the vehicle. Okay, so let's say in the middle of September we bought the vehicle. So on the 15th you go out, you buy the vehicle, you're going to do that journal entry. At the end of the month, somehow you're going to figure out what the depreciation expense is on the vehicle. We'll get into how to figure that out. There's many different ways of figuring out depreciation expense depending on what method you use. We'll talk about that a little bit later, but for right now, if I just tell you that depreciation for that 15 days, so between September 15th and the end of the period, which is 9/30/16, if I just tell you that depreciation on that vehicle was, say, $100, then the debit would be to depreciation expense for the $100, and you would credit accumulated depreciation vehicles for $100. Obviously, depreciation expense is your income statement account. That's an expense account. And accumulated depreciation expense is a type of asset account. Specifically, it's a contra asset or an anti-asset account. And accumulated depreciation vehicles shows up on the balance sheet directly underneath the vehicle account. So that's another type of an adjusting journal entry. There's a few others that we can talk about a little bit later, but those are the big adjusting journal entries. You have to do your adjusting journal entries before you prepare your income statement, statement of owner's equity, and balance sheet, cash flow statement. Otherwise, your income statement is going to be off and your balance sheet is going to be off. Okay? So hopefully that helps out. I look forward to seeing you in class.